Breaking news. China's yuan dives to 11-month low as Trump trade war threatens mass sell-off like 2015. China's yuan hit an 11-month low as the threat of a trade war with U.S. President Donald Trump sends Chinese stocks into a tailspin. The People's Bank of China set the yuan midpoint at 6.6497 to the U.S. dollar before the markets opened today, which is its weakest fixing since August 2017. This move is sparking concerns that Washington and Beijing's spat over tariffs could escalate into a full-blown trade war. Mr. Trump's administration is planning to put a 25% duty on pound $25.78 billion, $34 billion, worth of Chinese products that cover more than 800 product categories. In retaliation, China's President Xi Jinping's government is also planning to slap a 25% tax on U.S. goods worth the same amount. These retaliatory trade tariffs are expected to come into effect this Friday, July 6. Even before the world's two largest economies' tariffs come into place, the very sentiment has already hurt Chinese markets as investors are putting their money to the safe haven dollar over the Chinese emerging market currency. These drastic moves are what has caused the yuan to drop in strength to the dollar, according to PBOC Governor Yi Gang. A market strategist at the Sumitomo Mitsui Trust Bank says it is too early to tell what the tariff's impact will be on the global economy, but it has already caused rife speculation in China. Ayako Sara said, "It's not clear yet if the trade row will derail the global economy as a whole, but it's already clear that it will harm Chinese companies. That is why we've seen Chinese yuan and Chinese stocks have suffered sell-offs. I think this will continue at least until the July 6th deadline." The nosedive in the yuan has caused comparisons to be drawn to August 2015 when the Chinese central bank unexpectedly allowed the currency to weaken nearly 3% against the US dollar. The move triggered a mass sell-off. However, Iris Pang, a Greater China economist at ING, doesn't think the fall in the value of the yuan will cause a repeat of 2015. He said, August 11, 2015 was a crisis caused by the central bank. Today's depreciation is market-driven, reflecting the risks of a trade war. This implies that the central bank is allowing market forces to dictate the speed of the depreciation when there is room to do so. A Singapore-based senior sovereign analyst at BNY Mellon Investment Management said there isn't cause for alarm as the yuan is experiencing a downturn at the same time the U.S. experiencing an upturn. And Dimitra said, "I detected increasing alarm over trade tensions and a lot of nervousness about a full-blown trade war, which comes at a bad time for China where the economy is undergoing a downdraft at the same time the United States is seeing a sharp upturn. There is undoubtedly cause for concern, but not alarm on the prospects for the Chinese yuan. A lot of people are not thinking through the range of outcomes and the limitations on policy flexibility from a seemingly inexorable slide into an escalating trade war."